Hi friends, so let's begin today's analysis. Uh, I think a mixed kind of a day today, but let's start with how the global markets are panning out, and because a lot is happening in around the world and it's affecting our markets for sure. I'm sure if you are tracking the markets of the globe, you must be aware what is going on. But just I'll give it in my perspective. So yesterday, as we are closing, we're around 350, 360 points down on the Dow and around 180, 190 points down on the Nasdaq. I also told yesterday that the screen is telling and probably the VIX is telling that a lot of hedges has been taken into a system, but shorts are looking less, hedges are more. That's how data came in the evening also. There was a cash selling of only 480 crores or from the FIs. The stock futures also they sold around 500 crores only. And there was a lot of around 5,000 crores of options activity which was seen in the FI category, which means probably they would have added a lot of hedges into today's strategy. But the US markets actually were much weaker as the we were expecting in the closing time of our markets. Dow actually fall around 900 points and intraday it was down around 1100 points. Although it recovered in last half an hour, 45 minutes, 200 points, but eventually it closed almost 900 points down. And in the morning, the futures were also trading 300 points down. That is before our market began. It was around 6 o'clock, 7 o'clock. It was around 300 points down on the Dow futures. Nasdaq closed 700 points down, and still further it was showing around 200 points down. That was the kind of massive fall that happened in the US markets yesterday. So Nasdaq was down around 4.5%. Dow was down around 2%. And the biggest leader of the fall in US markets was Tesla, which was down 15%. Tesla has now down 55% from the price where Mr. Trump actually got elected as a president. So all the rally of Tesla has fizzled off, and whatever has fizzled out, apart from that, it has given away 55% of the price from there as also. So that is the kind of downfall Tesla is witnessing. Huge downfall. Yesterday was just a free fall in Nasdaq, and that is the worry when you and I've been if you just recall my videos, I've been telling that Nasdaq is very overvalued. It has to fall, and now I think Nasdaq is down around 18% from its peak, so it's very close to the bed category. And I think Russell 2000 is also all. It's also very clear, very near to the bear category. So these two indexes are phenomenally down. Now, what spurred this kind of a downfall in US? Again, I think the tariff war is not giving confidence to the investors there. People are feeling that this will have a very adverse effect on the US markets and US companies as such. People are confused. People are not able to take decisions on uncertainty. Whatever money has to be put in for any establishment or let's say enhancement or any factory setup or whatever it is, people are holding back the investment because the policies are too uncertain. They're changing very fast. When you have this kind of environment, the investments go slow and the consumption also goes slow. People try to save more rather than spend more. That is what is hurting the US sentiments. People are actually not going there and selling the things. I said, buying the things. That's the reason why consumer sentiment is falling very steeply, and people are feeling the fears of recession. I told you in my previous videos also that a study which is done by Atlanta Fed, it shows that this quarter GDP will be around 2.5% negative. But that also we have to take with a pinch of salt because that negative GDP growth will be because of a lot of manufacturers in US have imported these raw materials in advance or whatever they want as to their production because they were anticipating this kind of a tariff war and they were anticipating this kind of uncertainty. So a lot of imports have happened, and that is why the indicator of Atlanta Fed is telling that it will be 2.5% or 2% down in terms of GDP. But but you have to adjust that factor because a lot of imports have happened. If 2.5% down GDP is, then the overall GDP of the entire year will become only 1%. And if we all know what's the definition of recession, that two consecutive quarters in a country, if the GDP growth is negative, we call it a recession. So this quarter, we will get that negative GDP growth, and that is what is worrying the markets. That is what, a panic came into the markets, and anyways, the markets were trading high. The US markets have been resilient from last almost 7-8 months. They are not coming down. They were showing a lot of resilience, but eventually it panicked yesterday, and we saw a massive fall. I think Dow is now close, or let's say at lower levels when Trump became as a president. Nasdaq is anyways down. Even Russell 2000 is also down from the levels from where the Trump actually became president. So no rally of Trump is now in the markets. It's actually trading downwards. But what actually panicked more the markets is when the statement came from Mr. Trump that he is not seeing the markets, he is not worried about the downfall in the markets. He said it's temporary. He said he's ready to go for recession for a longer good of the US markets, and he told that yes, there are chances of a recession in US. So when your president is coming and telling this kind of statements, the market has to react. Before that, I think Dow was only around 400 points down or 500 points down, but as soon as the statement came from Mr. Trump, it had a massive fall, and eventually we went up to minus 1100 points, but closed around 900 points down. Similar thing happened with Nasdaq also. That is the kind of US markets we already have discussed in our videos, that US top has already been done. Get out of it. Nasdaq top has already been done. Bond yields top has already been done. Bond yields are now trading around 4.18. I think it's around 5 months low if I'm not wrong. Dollar index came down to around 103.5. That is also 5 months to 6 months lows. So all these things we already spoken in our videos. If you just recall our videos last 15 or sessions or so, continuously we've been telling that the trade of sell India and buy China, Hong Kong, and US or Europe, that trade is now over. It was probably over at 22,800 also, but I don't know why it overstretched and we went to around 22,100. But at this point, this trade is definitely over. We discussed all these things, that the bond yields have topped out, dollar index have topped out, US markets have topped out, rupee has formed its bottom, not breached those bottoms. The GDP has made its trough, it has made its bottom. GDP will also be on the rise now. India's inflation will be benign. So we have spoken about all these factors in length for the last 15 days. I know things have not planned out in that way, but things take time to turn around. Any hedge fund or any fund manager who's negative on India and has been selling, you can't expect the trade to reverse very soon. It takes time, because you have to collect funds, sell those, come in cash in other markets, and now they are coming in cash because the dollar inflow now, and now we are seeing some of the biggest short positions on dollar now, which means that the dollar will remain subdued, will remain weak. Even the bond yields will from here on looks weak. It will not probably it will range between 4% to let's say 4.4%, but that will be the kind of range of bond yields that have also topped out. You can also see a chart which shows the difference between 10-year bond yields and 2-year bond yields. That is also coming down. So when your 2-year bond yields start superimposing 10-year bond yields in US, that is the inflection point from where the recession fear starts. And once you start getting your bond yields of 2 years greater than 10-year bond yields, that is the time you can say that the recession has already started to commence, or it is setting in. It is setting in. So that's the kind of graph it is showing now, that the bulb has come down, which means that US economy is not doing that good. Although I still feel that the consumption is still not negative, consumption is still positive, and the real GDP numbers which have come up till last quarter was showing 2.3% growth. So probably a lot of things are theory, a lot of things are it's anticipation, but the real numbers has to be seen. And even if the GDP numbers come negative in this quarter, we have to keep in mind that the consumption has not become negative. It is because of the larger imports that have happened than the export. That is the it will show you in the negative GDP growth for this quarter. Now, crude also slipped, because if the biggest two countries are going into recession, or let's say slowing down, then of course crude has to react. So it was around 2% down. Today it is slightly up, but it is now trading below $70. So again, a great news for India as such, because it becomes another parameter of importance to us. So China and US slowing down. That's why the crude is not going up, and probably will not go down, not go up now. I told you yesterday also. I think Goldman Sachs have given a target of around $50 for crude. I don't know what will happen or not, because Goldman Sachs is one such agency which gives you aggressive targets either on the upside or on the lower side. They give a targets of $3,600 on gold, but I I'm still of the opinion, it's my personal view, gold has also topped out. You will not see levels of $3050 crossing in gold, and it will suddenly show you a sharp sell off. The kind of rally that has happened in gold, be very, very mindful, very careful. And today the data is telling, I think yesterday data is was that the gold ETF, I think in India, or let's say combined, it is at 6 years high. Gold ETF. So people are buying again on the higher levels of gold. That is a mistake which all investors always do. They want to buy the things when they've already risen, and they want to sell the thing when the things are, getting, they're moving southwards. That's the worst part of investing. How can you buy something which has already grown so much? And what are the fundamentals you're seeing in gold that it will grow up? It will go up. We're not expecting too many Fed rate cuts, anyways. I think maximum two rate cuts is what now the US market is anticipating. Even if you see the rate cuts, we'll see the bond yields coming down, but you will not see the dollar index now coming down too sharply from here on. It might move here and there $1 or $2. That's all. I don't think below $102 index can still sustain. It will remain at around $102 at the bottom and probably 105, 106 at the upper end of the range. So if dollar index will not change, we are seeing two rate cuts, and if the wars are coming to a slowdown slightly, and you've already seen a big rally in gold, why do you expect the gold to give you a astronomical returns even at these levels? So ETF gold is a good option, but you should buy on dips. You cannot buy at these levels. That's my view. I mean, anyways, you can take your own view, but I'm not very bullish on gold. Probably for me, the gold trade is over now, and I'll wait for dips. I'll wait for it to cool down and then enter the gold once again. As a strategy, gold is a very good option. You should always have in your portfolio. I always recommend that in your portfolio, you should have at least 5 to 10% of gold, either in physical form or ETF form or bond form, whatever it is. But you should have 5 to 10% of gold in your portfolio. That is must, but don't buy at these levels. There are times to buy it. You have to just leverage your positions accordingly. So that is what is happening in US. China, the problem is that Goldman Sachs have downgraded. So, I'm sorry, Goldman Sachs has upgraded China. They are now overweight on China, and they have reduced an overweight rating to neutral rating in US. So Goldman Sachs is now neutral on America and is overweight on China, and of course they're overweight on India also. So US, you will see those kind of outflows, which is already happening, and you will see those numbers coming to emerging markets, India and China. I've already told you, India and China this year will outperform the US markets and Europe market for sure. 100% they will outperform the US market this year. There's no doubt at all. The way we are moving, the way US is moving, that is written on the wall. So that's another news in terms of Goldman Sachs. Morgan Stanley today again very bullish on India. They think that this is the best correction that is offered now for many of the investors who are waiting for good levels to buy. These are the levels to buy. And anyways, Rhythm Desai, which is Morgan Stanley research head, has been telling this for quite a long time. Now even Goldman Sachs, Citibank, Bank of America, all the big brokerages are probably very bullish on India. And now we will see those fund flows also coming to India eventually. Even today's price action, it is looking that we would be seeing some kind of buying, at least in the FNO section today from FIs. I don't know about cash because IT was down today, and IT has to be down because Nasdaq was down around 4.5%. So probably, and if you have recession fears in US, then IT will be the most affected. We all know that. Even rupee is now not supporting IT because it has become either stable or it is slightly increasing only. Today also I think it was 5% or 10% stronger today. So the tailwind in terms of rupee depreciation is not there for IT now. And if there are recession fears, which I don't think so it will happen, but even if the market is anticipating that there will be a recession in US, then IT companies will get hit because of that. So be careful in IT still, although the levels are very mouth-watering. And I think there are some brokerage reports for bullish on Infosys, Persistent, and all those things. So be mindful of that. Again, I say that good levels and good news will never come at the same time. So there you have bad news for IT markets in terms of US slowing down, and that is why you're getting these rates. That is why you're getting these stocks at these valuations and these prices. So look for your valuations, look for growth, and whatever IT stocks you want to buy, you can still buy. It's not that you will see a major downfall in IT market from here on, especially mid cap ITs. Yes, some of the IT companies will face bellwether. It will not be an easy ride, but still, some of the IT companies still give you a value. So that probably happened in terms of, and what again people are not liking in US is the way he's flip flopping the things. Sometimes tariffs are put, then again they are taken. Then I will remove this product, I will remove that product. So he's confused, and the way he reacts, he called the president of Ukraine into his country. He was sent with such a humanity. Nobody would have liked it. Then I think Zelensky wrote a letter to US president that I'm sorry for whatever happened. Still, they didn't move any inch on the deal. They actually stopped the intelligence to Ukraine. So that kind of dadagiri and that kind of moves is what Trump is signaling to the entire world, which nobody's liking it, including their own consumers, including their own consumers. So yes, the exceptionality of US will still remain. I'm not saying it will go away. But for the short term, I think that exceptionalism has gone in terms of US, and probably the money flow will start or has already started into the Indian stock markets. Now, we had a massive gap down today as we expected. Yesterday, also, we spoke that since the hedges have been taken, US markets will perform much badly as what is seen on the screen in terms of futures today. That exactly happened. The Asian markets really panicked. Nikkei was down around 3% at one point of time. Hang Seng was down 2%. Kospi was down around 2.5%. So all these major Asian markets were all down. But eventually, the Dow futures and Nasdaq futures came in green. And these indexes of Asian markets also recovered. So as we, and we probably closed in green today. So that's a satisfying thing that you probably is not seeing a much downfall now. If this market would have been 2 weeks before market, we would have at least closed 600, 700 points down. 900 points downfall we have seen from the US market, and still we closed in green. Dow futures were in green, but they were hardly in green. Only, I think only 100 points up. So out of 900 points, only 100 points up on the future, and that to the futures, which is only 5% of the volume of the whole US markets. Still we closed in green, and we tried to close above those call writers of 22,500. And I think we saw some of the positions getting exited today also in the last 1 hour or so. Eventually, it is giving you a signal that the markets don't want to go down. Even with the bad news of IndusInd Bank, the markets didn't panic too much and were still able to close in green. IndusInd Bank, I think it was a massive news. It was some kind of a massive sentiment batter, because how can a company not know about its balance sheet about such a big loss for 1 year? This rule change or the scheme change or the way of calculating the losses or profits for derivatives came in 2023 September, and now it's almost 1.5 years. You would have calculated your loss, profit, whatever it is, and would have declared it. 6 months is what the management was knowing about this error, but they never came on board and told. That has actually shaken off the entire confidence of the investors, whether it is fund managers or retail, anybody, and they have sold the shares left, right, and center. See, one thing you never like in a company is when the management hides things. And if you can't trust a bank, if you can't trust a management, then stocks cannot rise. And that is what exactly happened in Industrial Bank. If you remove Industrial Bank, because this is one stock which is part of Nifty also and Bank Nifty also. If you remove Industrial Bank, markets have done fairly well. I think if Industrial Bank would not have been there, we would have closed in green for Nifty Bank also. And anyway, we closed green in Nifty as well. So, anyways, the markets have looked good. And I think yesterday also we were speaking that the broader range for this week, the market says 22,800 to 22,300. 22,300 on the lower side and 22,800 on the upper side. That's was the option writing is telling you. That is how the markets are placed as of now. And I really don't see that again those levels 22,000 being touched. But let's see what happens. I would still say this is the best time to invest, but for FNO thing, you require those important levels to be crossed before coming to a confirmation. At least you want that to 20-day expansion moving average to be closed, to be crossed. We close out the 20-day expansion moving average. 22,800 levels, those are the levels which we defended 7-8 times. We want at least those levels to be crossed to become much more, confirm about the uptrend. Although, anyways, I have taken my positions, so that is fine. That is my view. But if anybody wants to take a new position, you should wait for at least the market to cross about 22,800 levels, where you start getting your daily chart also become positive, weekly also, and probably to some extent monthly also. Although it will not be easy to become positive on monthly chart, but still, if somebody wants to take that kind of a risk, it can be taken at least on a weekly chart and daily chart if you start becoming positive. IT index anyways was down because they were hit too much on the Nasdaq side, and of course on the US market was getting slowing down as well. In TVM, we also got a news from Indian markets where I think government is trying to give incentives to the exporters who want to export to the country, so that the fears of tariffs and all is not in the minds of people, especially those SMEs, which are small sector industries, to retain that confidence and keep on investing and keep on making the products for export. So I think that is the kind of support which government has announced. They have not given the figures of each investment, or sorry, each industry wise what the incentives, but they have declared that they'll be giving incentive for export. So that's again a good move for Indian markets. As from the government, government is still very proactive, and that is why I like these markets in terms of their actions are very timely. You see, India is one country which is fighting hard with US to negotiate the tariffs. Our tariff date is 2nd April, but we have been negotiating this. Mr. Modi went on first week of February to US. I think 2nd February, if I'm not wrong. 2nd February he was there. Uh, then again, Piyush Goyal is again in US and trying to negotiate. A lot of to and fro of information and to and fro of those kind of dealing, so that kind of negotiations have happened. So India is striving hard to find a balance with US. So that none of the other countries are doing that, or at least I don't know if they're doing it back then. But that is what one thing which I like in India and this government, that they are very proactive, and they want to take things at the stride, and that gives confidence to many people. So I think that news came. That was a good thing. RBI also told that the gold loans have probably increased to a dangerous level now. The gold, anyways, have been touching a higher values from last 1 year. That's actually prompts a lot of retail investors to go for gold loans because they get higher value out of it. So I think RBI has given some kind of a warning sign that the gold loans have crossed to a certain limit and should be stopped. If they don't stop, probably RBI will take certain action to reduce that. So that's one another thing which is appearing in our markets today. Overall, I think the best thing for the markets today was that all the bad news, we could absorb that kind of selling. Yesterday also selling was not big from FIs. The number one was showing that. Today again, I think I'll not be surprised if you see some buy figures, at least in the F1 segment, and the F1 and the FI numbers will look good from here on. I think with the negative growth coming in US, or let's say they're growing at 1% or so, and the kind of statements Mr. Trump is giving, and China also struggling with deflation and all, there is no heaven now for anybody to invest anywhere else. So money has to go. वो बोलते हैं ना कहाँ जाएंगे इंडिया में ही आएंगे. So people have made a lot of fun out of it that because of this statement now the FIs are not coming. They have to come here. I'm still repeating. कहाँ जाएंगे यहीं आएंगे. They have to come here because there is no other destination. We are still growing at 6.2. Last GDP now is 6.2%. Now the government is told we'll be growing at 7.6%. So even if you take an average, we'll be growing at 6.5% GDP growth. And if you add inflation, we're growing at 10.5% normal GDP growth. Our earnings will be, if the normal GDP growth is 10.5%, our corporates are good enough to at least beat the GDP numbers, which means we'll be growing at around 12 to 13% or 15% in terms of corporate earnings. That's huge. That can actually justify those high valuations we are enjoying. So we are trading at around 20 times forward earnings in the MSCI index, which looks high as compared to China, which is trading at around 13, 14 times. But the kind of growth we are giving, the kind of political system stability we have, the kind of enthusiasm, the kind of proactiveness this government is showing in almost all the things. You see, from budget to RBI is putting all those, uh, you know, liquidity easing, then the rate cut has been done. All those government channels, government machineries are absolutely on fire. And everybody's target is now to put India into a growth target of around 7.5%. That is what the target of everybody in the machinery is. And if government thinks that they want to achieve a growth rate of 7.5%, it will be done. If the chief of your country thinks I want growth at any cost, it has to come. There's no other way in a country like India where you have demographic advantage. You still have a population of people below 60, people below 17, 27 years of age, 60 crore people. So India has to bounce back. India is on the road to bounce back. Anybody who delays in his investments from this point of time will only be a loser. You can pick your stocks. Value is there now. It's not that everything will go up. Nothing will. It's nothing of that sort. There'll be selective stocks going up. It will not, and you'll not see those kind of big rallies now that it's the stocks are becoming 2x, 3x, 5x, 4x. That should not be actually. That's the reason why we are seeing this kind of massive bear markets. When these kind of rallies happen, when you take a lot of things from future, if you bargain or let's say buy too much in the future, then of course the future will be deprived of the things. That is what is happening now. But overall, I think the market looks still bullish. We are supported in the downfall. Upside may also be restricted. We have to see step by step where we are going. But the valuations, the global setup, the parameters are all looking absolutely fantastic. Even the charts are looking good. Now the today's recovery actually means a lot. We want these sessions like this 3 4 times to give much more confidence to our buyers, our mutual funds. Then you will start seeing those kind of like you see panic selling, you will see those kind of panic buying. FOMO will start kicking in, and that time you'll see a rally into a market. It's not far away. That inflection point is very near. That inflection point is very near, and you will see one sharp rally, and which will just bring everybody's confidence on board. I think that rally is very near. It's very close, Anshi. That is should happen very fast now, and we all hope that things should improve from here on. So this is the analysis for today. I hope you would have liked it. Thank you so much for your time. Thanks.